Hi, good afternoon. Welcome to the marketplace. Coming up, inflation for May 2025 drops sharply to 18.4%, the lowest recorded since February 2022.
It's actually influenced by food inflation of 22.8%, down from 25% in April 2025, and non-food inflation of 4%.
Also coming up, Bank of Ghana moves to regulate digital lending amid rising consumer exploitation.
And they violate the principles of fair treatment and transparency. We expect all banks to review their pricing models and ensure that customer charges reflect ethical and commercially defensible standards.
We'll delve into it on Let's Talk Tech. Stay with us, don't go anywhere. May 2025 has dropped significantly to 18.4% year-on-year from the 21.2% recorded in April. The Ghana Statistical Service attributed the sharp drop to reduction in transportation fares and decline in non-food inflation. The government statistician Dr. Alhassan Idrisu explained that the reduction in fuel prices at the pumps and the subsequent reduction in transport fares contributed to the May inflation. Take a listen.
A year-on-year inflation of 18.4% for May 2025, down from 21.2% year-on-year inflation in April 2025. And this May 2025 inflation is actually influenced by food inflation of 22.8%, down from 25% in April 2025, and non-food inflation of 14.4%, down from 17.9% in April 2025. On month-on-month basis, the 0.7% inflation recorded in May from April 2025, or in relation to April 2025, was also influenced by food inflation of 0.9%, which was maintained from the April food inflation of 0.9% and non-food inflation of 0.6%, down from 0.7% recorded in April 2025. Now, the month-on-month inflation is also influenced by inflation on locally produced items, 0.8%, down from 1.0% in April 2025, and inflation on imported items of 0.6%, down from 0.4% in April 2025. Ladies and gentlemen, in conclusion, what are the key highlights of today's presentation on inflation? The presentation shows that headline inflation declined to 18.4% in May 2025, down from 21.2% in April 2025 and 23.1% in May 2024, marking the lowest rate since February 2022. This is a fifth straight year-on-year decline in inflation and a clear signal that price stability is returning to our economy.
Joining me on Zoom with reaction is Head of Finance at Melbourne Capital, Nelson Kujo Quagbi. Good afternoon to you. So May inflation has dropped to 18.4% from 21.2% in April, largely due to reduced transport fares and fuel prices. How sustainable do you think this decline in inflation is, considering the underlying structural challenges?
All right, thank you very much, Daryl, for having me, and good afternoon once again. Just as the director said, the underlying factor that contributed significantly towards the reduction of the CD, towards the reduction of inflation, is the stability of our functional currency, the CD. And so to the extent that we continue to manage our foreign currency, policy, to the extent that we continue to stabilize the cedi, we expect inflation to go down or inflation to take a nosedive going into the future. The prices of fuels at the pump has reduced, and that has culminated into the reduction in 15% of transportation fares. And so once we are able to manage our currency very well, once we continue to make sure that the cedi continue to stabilize, we expect inflation to continue to reduce significantly.
Yeah, but people are beginning to question the outlook following what we saw yesterday, where the government is moving to impose a 1 cedi tax on a liter of petroleum products. That has generated a lot of debate. How do you foresee that impacting inflation going forward, as well as consumer purchasing power?
All right, I don't foresee any significant impact on inflation. As I did indicate, the underlying factor for the reduction in prices of goods and services is the stability of the Ghanaian cedi. To the extent that the Ghanaian cedi continues to remain stable going into the future, I don't foresee this 1 Ghana cedi fuel price increments to have any significant impact on inflation. In any case, there are projections that the cedi will continue to appreciate further, even to a single digit, before bouncing back. And so if the trend continues, I don't think the 1 Ghana cedi, fuel levy or fuel tax will have any significant impact on inflation. However, when it comes to consumer purchasing power, of course, any time taxes have been increased, it will significantly impact on purchasing power of consumers. And so we expect a certain level of erosion of the purchasing power of households and those who actually go to the pumps to buy fuel.
Well, I guess a few more people may be concerned, especially when, based on the data that we have received from the Ghana Statistical Service, the reduced transport fares and fuel prices also contributed to May inflation going down. You talk about the cedi, which is for you the major factor when it comes to whether or not inflation is going to go down going forward. The president, John Mahama, yesterday at an event suggested that the real value of the cedi is around 10 to 12 to the dollar. People didn't like that. He said that. Talk to us about how such statements could impact inflation outlook, also market confidence.
All right. You remember after the Monetary Policy Committee meeting of Bank of Ghana, the governor didn't give us a target rate. I think you questioned me on this a few days ago. And I made mention of the fact that when a target rate is given, what will happen is that it will spark speculative activities within the market. Don't forget that people are still having foreign currency, hard currency in their homes. And so they are just waiting to see the volatility level of the exchange rate. And once the president mentioned that the exchange rate will stabilize within the band of 10 to 11 Ghana cedis, it will certainly spark speculative activities. And so people who are having dollars may either want to release it into the market now, or others who may want to still take some level of risk. They may want to hold, the hard foreign currency in anticipation that the price will certainly go up. And so comments like this will certainly provoke and spark speculative activities, most especially within the informal market, which is being normally done by the black market guys.
Yeah, and doesn't that also beg the question, why is the central bank not setting a target? Wouldn't it make things easier?
Well, as I did indicate, any target by Bank of Ghana will spark speculation. People will be holding hard currency in their homes. They may not want to release it, believing that once the rates go up, they will release it into the market and make their spread. So I think it would have been better for the president not to. In any case, the president also said that when the cedi appreciates excessively, it will certainly affect our export earning, which means that the government itself is eyeing a specific rate or a band of rate within which the cedi cannot go down. So with this comment, I think it will provoke or spark speculation in the market, most especially the informal market.
Okay, I want us to touch a bit more on the 1 cedi tax on petroleum products. I just want you to lay out first the economic implications and how should businesses reposition themselves in light of this tax, and especially when inflation is still well above the Bank of Ghana's target.
All right. You and I know very well that the energy sector is saddled with debt. Per the data released by the finance minister yesterday, the energy sector alone is having about $3.1 billion. He also made mention of the fact that we need about $1.2 billion to purchase fuel for power generation. And so the question is, are businesses ready to pay 1 Ghana cedi to enjoy stability of power, or they are not ready to pay in order to enjoy, intermittent power outages? I think the 1 Ghana cedi may not have any significant impact on businesses, considering the fact that all the economic, indicators are in green. Once we are able to manage our currency.
I was just going to say it's 1 cedi on every liter of petroleum product. You think it's not significant?
Well, it will not. So that is so we need to weigh the balance. Are businesses ready to pay to enjoy stable, uninterrupted power supply, or they are not ready to pay where we'll be enjoying doom so? So I think in terms of the impact, the benefit far outweigh the cost that they will incur in purchasing fuel to power their generators. So in terms of businesses, yes, there will certainly be some significant, impact, but I think the benefits of paying that money far outweigh, the cost. The thing is this: what businesses and individuals are asking for is one, accountability. Those people who are responsible for the mess at ECG must be held accountable. Number two, businesses and individuals also want transparent and targeted use of the proceeds. We don't want the proceeds to be uncapped. We don't want the proceeds to be diverted into other sectors. We were told that the 1 Ghana cedi will be used to, as it were, service the debts that we have in the energy sector. And so once we have a transparent and targeted use of the proceeds, I don't think businesses, in any case, me as an individual, I want to go home and enjoy, uninterrupted power supply. So I am ready to pay the 1 Ghana cedi because the benefit far outweigh. Then another issue that businesses may be asking is whether there will be a sunset clause. Is this particular, levy going to operate like the fiscal stabilization levy that has been changed into growth and sustainability levy? So we need to know whether there will be a sunset clause where we will know when we'll. It doesn't mean as soon as we are done paying our debt, then the tax will go. So we need to know the sunset clause. And so these are some of the issues that businesses and individuals will be asking as far as the 1 Ghana cedi is concerned. But as to whether it will have a significant impact, of course, it will. But the benefit, I think, in my opinion,
right,
far outweigh the cost.
Yeah, final question. So what are the implications of this also on the central bank's monetary policy? Do you figure that the central bank may want to adjust following these latest developments?
Well, I think that the Bank of Ghana must not be in a rush to adjust, the policy rate either upwards or downwards. I think that the policy rate should be maintained at 28% because we have reaped the benefits of this policy. And so adjusting the rate upwards or downwards may erode the gains that we have made. So I think going into June, July, August, by even beginning of third quarter, we should be able to maintain the policy rate at 28% in order not to reverse or erode the gains that we have made so far.
All right. Thank you so much, Nelson Kujo Quagbi, Head of Finance at Melbourne Capital. Appreciate your time with us on The Marketplace. You're watching The Marketplace. We're taking a short break. When we come back, we'll be talking about digital lending. Don't go anywhere. welcome back to the marketplace. Time to talk tech. The Bank of Ghana is stepping up its regulatory efforts, announcing plans to issue comprehensive guidelines on digital lending by August 2025. The move comes amid rising concerns over exploitative lending practices targeting vulnerable Ghanaians. Governor Dr. Johnson Esiama says the new rules form part of a 5-point reform agenda aimed at strengthening financial stability, ensuring consumer fairness, and tightening market discipline. Joining me on Zoom is lead for Eyes of Africa, Henry Kobler. Hey, Henry. So with the Bank of Ghana set to introduce digital lending guidelines by August, what key regulatory features do you think are necessary to curb the exploitative practices we've seen from some platforms?
Thank you very much. So I think that it comes in as much that we're getting into the digital age. And as much as we're getting into the digital age, you're having people fully depend on platforms to push in their transactions, pushing for lendings and all of that. I am looking forward to quite a number of reforms that would really come in, especially connecting with fintechs to main banks as well. I mean, there've been quite a number of reforms that we've been expecting from the Bank of Ghana. But for me, generally, I'm looking at the reforms that comes in terms of anti-money laundering. Really on most of these platforms is very key for us. Again, we're also looking at the charges that seem to come true on most of these platforms as well. I mean, one of the most important things which we've been talking about, which I think that the governor had also pointed out in the recent time, is the fees that seem to be coming on most banking platforms that are available, and that has been a major concern for most of us as Ghanaians. And I think that it erodes the gains we've made in terms of e-levies on digital platforms.
Well, Henry, we've seen a rise in digital lending apps. How have they outpaced regulatory oversight by, I mean, the powers that be? And what risks do these pose to consumers and to the fintech ecosystem?
I think that with these platforms, most of it has been that it's just so easy that most of the people that create these platforms and put them on generally do not go through any regulatory reforms and checks before they throw them up there. Again, I think that the monitoring on most of these platforms is extremely low, where it doesn't get to curb and punish people that are putting up these platforms. I mean, usually we've seen a lot of lists being thrown out there to discredit and tell us that these platforms are not credible. But what are the persecutions that we basically would have for these platforms? I mean, it has to come in clear for us to push it out there for people to understand the implications of getting in. Again, I'm thinking that generally, when it has to be in terms of lending platforms, it also has to be that you would always have to go through the sandboxes. Most of the developers of these platforms do not go through any sandboxes. And so, again, it poses a lot of threats. Personal data, personal security also gets to be a big of threats as well, where you have people taking people's data and manipulating it against them. I think that all of them comes into play in terms of these platforms and how they're being put out there.
Yeah, I mean, you talked about the caps on card transaction fees as well. I'm just trying to figure out how these measures can improve the competitive landscape in the fintech ecosystem.
Yeah, I mean, the fintech ecosystem generally sits with volumes in terms of transactions and then the fees that comes through to them. And if you do not cap them relatively, you're going to have anybody go out of their lines to be using explorative ways to be getting some level of credit to them. And so for me, it really comes at a good point where it is capped, it is regulated, and we could have a plain way to understand the charges that comes in on these platforms.
Next question, how to deal with predatory lending behavior and how to detect them, for instance, using maybe AI and other innovation. Aside from these measures, could we employ technology, AI?
Yes, we could. We could be employing a lot of technology in that regard. The problem really has to be the terms of development for most of these platforms. I mean, you're not going to have AI developers managing most of these platforms, data analytics, data scientists sitting on most of these platforms, especially within our regions. It's very difficult to have most of these skill sets easily available for us. But yes, having that machinery in terms of the technology on these platforms really is going to be very important in terms of how transactions on these platforms are. But again, it's also going to have to look at how we regulate these optics within these applications, because again, it relatively also gets to be intrusive. It could relatively be looking into could definitely deploy in terms of APIs to looking behind most of these applications, even intruding into other banking applications that are on customers' mobile phones and all of that. So yes, it comes in with its advantages, but there could be that form where regulations could guide the use of this as well.
Yeah, Henry, these stricter regulations, they could drive innovation in the fintech space, or they could also push out startups or small businesses, small digital lenders. What say you?
Yes, it could be, but I think that it's important that for me, my point when it comes out to technology is that it always has to be regulated. I mean, if you do not regulate it, you're going to have innovators always go out of scope to give themselves the leverage to overcreate. I mean, I've seen quite a number of acts within the machine learning and AI that really gets to be very scary, even for me in technology and the future thereof of it. But again, we can always just consider it in terms of it killing businesses. But again, I'm thinking that it's very important that we institute that as well.
All right, Henry Kobler, lead Eyes of Africa. Great to see you. Thank you so much for your analysis. Well, while we talk about lending, we can do this last story before we go. Governor of the Bank of Ghana, Dr. Johnson Estiama, is determined to see lending rates drop to less than 10% before the end of his tenure. This, he believes, will cushion businesses and increase economic growth. The governor disclosed this in a session with Ghanaian businesses at the Association of Ghana Industries Corporate Forum.
I had a very good meeting with the CEOs of all banks in Ghana. And we went deeply into a lot of conversations. And I was telling them that regulating the industry, I want to see more of self-regulation. Because as heads of banks, you know what is good for the industry. Why do you wait for me to come after you? I expect you rather to agree among yourselves and come forth. I am just going to be the referee, and that's the way we are going to move. It was a very constructive session, and I told them one thing. I said, my vision is to see lending rates in this country fall to less than 10%. And it's doable. In other words, before the end of my 4-year term, I want to see lending rates lower than 10% in this country. It is doable. Why do we think it's not? Why do we think the Ghanaian cedi will always be a useless currency? It's not. And so we will try to do things together. We'll try to do things differently going forward. And I am sure, as businesses, at the end of the day, when you succeed, society succeeds.
Well, the audience obviously excited about that. That's the marketplace. Thanks for watching, everyone. More news on our website, myjoyonline.com/business. More on the story on inflation we are covering for you, myjoyonline.com/business. My name is Darryl Kwa. Thanks for watching. We will be back same time tomorrow.